Hey everyone, welcome back to the channel. Are you someone who loves to spend winters in sunny Florida and summers in beautiful Massachusetts? Well, if you're a business owner or professional with multiple locations, this video is for you. Today, we're going to dive into a real-life tax planning case where a business owner split his time between Florida and Massachusetts and still managed to maximize his tax deductions. Let's talk about how you can make the most of this strategy. Let's start with the story of Edward Andrews, a successful business owner. For 6 months of the year, from May to October, Edward lived in Lynnfield, Massachusetts, where he operated a pool construction company. And for the other 6 months, he lived in Lighthouse Point, Florida, where he ran a horse racing and breeding business. Quite the lifestyle, right? But Edward did something really interesting. He decided to claim 100% business use of his Florida home. That's right. He purchased the home, used it for his horse racing business, and even depreciated the house and furniture as business expenses on his Schedule C smart move? Let's find out. Edward was strategic. He divided his expenses between personal and business use, which allowed him to deduct his travel, housing, and other costs. For example, he took the following deductions. 1. Personal deductions for a portion of his mortgage interest and taxes on his Schedule A. 2. Business deductions on Schedule C for the horse racing business. 3. Employee business expenses for his pool construction business in Massachusetts. By doing this, Edward was able to deduct significant expenses for both his Florida and Massachusetts homes. However, tax laws have changed, and now it's essential to be careful, especially when deducting employee business expenses, as the Tax Cuts and Jobs Act removed this deduction from 2018 to 2025. Here's where it gets tricky. The IRS wasn't too happy with Edward's tax strategy and challenged his deductions. The tax court ruled that Edward had 2 tax homes, one in Florida and one in Massachusetts, and as a result, couldn't deduct his travel expenses between the 2 locations. However, Edward didn't give up. He appealed the decision, and the First Circuit Court of Appeals overturned the ruling. The appeals court stated that Edward could have only one tax home and that he was entitled to deductions for travel between his tax home and his non-tax home. So what can we learn from Edward's case? Here are some essential tax planning tips. You can only have one tax home. Your tax home is determined by where you spend the most time and where your primary business operations are. The courts will look at your time spent, the activity in each location, and your income from each business. Use your non-tax home for business. Just like Edward did, you can claim deductions on your non-tax home if you use it primarily for business purposes. Keep detailed records. Always maintain accurate travel and expense records, as the IRS will scrutinize these claims. This includes documenting where you were, why you were there, and receipts for all expenses over $75. If you're splitting your time between 2 states and 2 businesses, make sure you have clear records showing your business activities in each location. As of 2024, the rules surrounding tax deductions have shifted a bit, but you can still make the most of your dual location lifestyle. If you run a business in one state and spend time working in another, you may be eligible to claim travel expenses, business-related housing costs, and even meal deductions while away from your primary tax home. Make sure you're strategic about where your tax home is located. The IRS will look at your major post of duty, which means the place where you spend the most time and generate the most income. If you're spending winters in Florida but running your primary business out of Massachusetts, the travel costs can still be deductible. To recap, here are the key points to keep in mind if you want to maximize your tax deductions. 1. You can only have one tax home. Choose wisely. 2. Deduct expenses from your non-tax home if you use it for business. 3. Keep detailed travel records and receipts to stay compliant with the IRS. With smart planning, you can enjoy the best of both worlds: warm winters in Florida and cool summers in Massachusetts, while still maximizing your tax savings. Thanks for watching. If you found this video helpful, give it a thumbs up, share it with your fellow business owners, and don't forget to subscribe for more tax tips and strategies. Have questions? Drop them in the comments below and I'll get back to you. See you in the next video.